Now, speaking of trying to get conviction in this market, the one place we had it and maybe lost it was Nvidia. Let's look at the market, those shares pre-market. They are down 0.5%, but that's nothing compared to what we saw on Friday. It was a swing of $250 billion wiped out in the span of 3 hours. Unclear if that's ever happened for a single stock in this market before. It was up 5%, down 6.5%, ended the day down 5.5%. And here we are at the moment, $171. But JPMorgan's Mislav Matecho writing and pushing back against the big tech valuation concerns. He says there's a concern over the very strong outperformance of the Magnificent Seven, but we note that the group is currently trading less stretched than a few years ago, given earnings delivery. Kelsey Berro and Jason Draho are still with us. Jason, can you put aside the volatility, the peak tech concerns, because earnings are still okay?
Well, I would agree with the statement that the valuations for a lot of these tech companies is actually reasonable when you factor in just how much the earnings have grown over the past few years, and also the expectations we have for growth, particularly in the AI space. The amount of spending we're seeing is sort of ramping up faster than anticipated, even 3-6 months ago. So when I think about the markets overall, I mean, there is two main drivers right now. There is the macro story where people are sort of still embracing the soft landing, and then we have this sort of more micro idiosyncratic story, which is the AI story, and the real kind of beneficiaries there. So I look kind of the combination that both those effectively are a bit of tailwinds for the market. You can look at the micro AI story. I think this is going to drive these pockets of the market higher. And if the macro plays out as we anticipate, that's also another tailwind. So I kind of think of it as both sides of the same coin, that for the equity markets overall, we can kind of look through some of this volatility thing, and there's two relatively strong tailwinds. Not necessarily a huge upside this year, but definitely kind of tailwinds to support equities at these relative levels.
I mean, I've heard it said that what happens to Nvidia is a macro story, that it could be a macro event that unleashes volatility should something go wrong, for example, in future AI conferences that they're leading and hosting. Kelsey, how transfixed is the bond desk by Nvidia? Is it a part of the conversation there?
Well, it's absolutely part of the conversation, but I would say more broadly, this is a debate about valuations and about fundamentals, right? About earnings power. So when we look at the corporate fundamentals in the investment grade and high yield credit markets, we see fundamentals that are still very strong and very supported. So, the question that we've been grappling with, in the equity markets, it's about PE multiples. In the bond markets, it's about how tight credit spreads are, and if those credit spreads are justified by the fundamentals. Credit spreads are narrower than they've been in a long time, but we do think that the corporate fundamentals do justify those spreads. And then if you add on top of it the technicals, the demand for fixed income that we've been seeing, particularly corporate credit, it still looks like a very good environment for credit here, both investment grade and high yield.